are where we blow apart the stock market and put it back together so that it makes sense for you. We're going to get a little bit of help today from a man named Ralph Nelson Elliott. Who was he? He was an American accountant and writer, and he wrote about something that was named after him eventually called the Elliott Wave principle. This gentleman here is Ramakrishnan. He is a Elliott Wave theorist and a practitioner. You've been a trader and a money manager, and you're out of Kuwait?
That's right. I've been doing this since 1984.
Okay.
Yeah.
What got you into waves? This is a method of predicting future stock prices, more or less. Some would consider it witchcraft almost, and it's sacrilege for the fundamentals of stock analysis. But why do you find it valuable?
Yeah, when I was a rookie trader, I looked for what is the most challenging way to anticipate the market movements. And people were saying that Elliott Wave principle is something that they don't understand.
Yep.
And so most people were not willing to try it out. So I decided to investigate that further. And the more I got into it, the better I got at it.
Okay.
So it just grew up on me.
All right, so it's a way of actually, systematizing human psychology.
Correct.
This applies to stocks. It can apply to a lot of other mass psychology items.
Crowd behavior.
But let's apply it to stocks. This is what the basic Elliott wave formation looks like. Ron, can you tell me about these three waves in the primary direction of a trend?
Okay, what Elliott has told us is all market movements unfold in a cycle of 8 waves.
Okay.
There's a 5-wave up move, and then there's a 3-wave correction. The 5-wave up move consists of 2 corrections and 3 impulse waves.
Right.
So the first move down corrects the wave 1. This move corrects the 3rd wave, and then we get the 5th wave. And once the 5 waves are over, we get a bigger correction.
So this is a way of looking at bull markets when they turn into bear markets or severe corrections. Here's the S&P 500 index. You wouldn't be a fool if you saw the Elliott wave pattern fairly apparent here from 2009 at the lows for the S&P 500 index, the big correction in 2010, the rally to 2011, the crash, if you will, when we got downgraded, then the rise from October being the 3rd wave, leading us to believe that that's a completed 3rd wave pattern. You actually wrote about this back in March. Would have been a good time to get out of the market or lighten up at least. You warned the S&P has some downside. Has it met all of its downside targets from your perspective?
I think we still have some more way to go. It's probably going down to 1,060, which is quite some distance.
That's about a 30% down move, my man.
That's right, yeah. And when I wrote that, a lot of people were calling me names, some obscene words as well.
Probably still are.
And now I think more and more people will be joining the bear camp.
Right.
Since we are on the way down. At that time I anticipated that this move up here was not part of the 5th wave,
right, as
some people are trying to persuade others. On the other hand, I thought this was a complex correction when all corrections unfold in 3 waves, A, B, C, and I said that this move is a B wave and therefore we'll get a C wave.
Okay.
So it's a matter of interpreting the movements the way you want to interpret it.
I would have looked at that and said, okay, you've got 3 waves from 2009.
Yeah.
And you don't think so, though?
I don't think so. I think the 5th wave ended somewhere here, and then we have an A, B, and C. This is a complex correction, and therefore we're going to come down all the way here.
Okay. That would be a big, deep correction. It wouldn't get us down to the lows of 2009. But 1,000 is certainly a lot lower than we are. You were also bearish on Apple at a good time to be bearish on Apple.
Correct.
It was at a high of $644. You wrote about 2 months ago that it was going to 510. It actually did correct to $520 per share.
It could still get down to 510. I'm not sure that the correction is over. I need to look at the charts. I'm on vacation as of now. But considering that I'm bearish for S&P 500 and the whole market could be edging lower, Apple could still get back to 510, and I think when it reaches there, it might be a good time to get long for the 5th wave up.
That would be approximately...
I think this is 1, 2, and 3 is finished. We are on a complex 4th, and then we'll get a 5th wave up.
This is a long-term chart of Apple, by the way. This goes back to 2000, and this is 2008. The big riotous up move could be wave 3. So wave 5 then could take us to $1,000 or more in Apple.
Well, at least it can go back to the recent highs.
Right.
And from 510 to that is pretty good.
So there's the Apple chart, 3-year look at it for you. 561 is where Apple's trading on Monday. Facebook, it's only been out now since what, May the 18th or 17th. You can apply some Elliott Wave analysis to Facebook and come up with some bearish predictions for that too.
Yeah, the beauty of Elliott Wave analysis is you can apply that to any time frame. And I had looked at the 5-minute chart a couple of days back, and I could easily see a 5-wave pattern unfolding and we are currently in an extended fifth wave that could go down to either $23 or $19, and then we'll get a rally back to around $28 to $30.
Okay.
So I would recommend that if anybody sees Facebook sub 20, to start buying.
Consider buying it.
Yeah, for this big move up to
the valuations then would only be about 3 times what Google's are. So, all right. Gold, we're looking at gold here. Here's a chart of the GLD going back to July of 2010. Here's that huge move last summer when it peaked out about 1850 or so. This is the GLD, so you divide that by 10. And we're back down to about 157 now, below the 200-day moving average.
Right.
What are your thoughts on gold?
See, I've been a bear for gold since from near its highs. And I was looking for it to come down to below 1400. It has been to around 1500 and change. And I don't know why this has happened. It's still a complex correction. I would tend to imagine that once all this crisis about the Eurozone is over, and when people get more relaxed, we will see it come down to the sub 1400 levels.
It's really been crushed because of the rush into the US dollar, as all the European problems have happened. Well, you're going back to Kuwait next week?
Yeah, I'll be back in office on Sunday.
Oil, are those guys worried about oil? The prices of oil going down now below $85?
Right, that was also predictable. And I need to look at the charts again to tell you the targets. Maybe when I go back next week, you can see that I will put up an update on Forbes about oil. And
Ramki's website is wavetimes.com. He's written a book on how to understand Elliott wave analysis. It's called
5 Waves to Financial Freedom.
5 Waves to Financial Freedom.